After years of attempts to get some version of Proposition 19 passed, Californians finally did it this week, giving a makeover to California's property tax assessment landscape. I am Farnaz with the Walker team of Interior Real Estate, back this week to discuss one of the most significant propositions in the last 40 years to affect California homeowners. The first aspect is that the proposition gives people over 55 years of age, severely disabled, or who are the victims of a wildfire or natural disaster, the ability to transfer the taxable value of their primary residence to a replacement primary residence anywhere in the state of California. Currently, if a homeowner sells a primary residence and purchases a replacement residence outside the 10 cooperating counties under Proposition 13, the tax assessments on the new residence is based on its price at the time of the new purchase. With the new law, this is now altered for qualified home buyers, potentially allowing them to preserve the lower tax rate that they currently have in place with the home they are selling. Let's share an example. Imagine Kyle and Linda purchased their San Jose home in 1976 and paid $100,000. With property tax and assessment increases each year, Kyle and Linda's tax basis is now $190,000 and their annual property tax bill is $2,000. Their home has appreciated over time and is now worth $2 million. If Kyle and Linda sell their home and purchase a replacement property before this new proposition, they would lose their tax basis unless they're purchased within those few specific counties previously mentioned. Now, what happens if they want to move to Southern California or even Sacramento and be close to their grandkids? If they purchase a home around the same value, their new property taxes would be over $20,000, a significant change in their annual budget. Proposition 19 allows them to keep their current tax basis without being penalized with a property tax increase as long as they purchase a home below the sale price of their current home. Also, if the market value of the new property is greater than the market value of the old property, then the difference would be added to the taxable assets value of their old property. In addition, this provision is available to homeowners who lost their home from a wildfire or natural disaster. We have seen too many people punished with the higher taxes when they didn't choose to move. By the way, homeowners will be able to take advantage of this transfer 3 times after the age of 55 to account for changes in their lifestyle. The second aspect of this proposition concerns parents to child transfers. Currently, parents can leave up to $1 million in investment properties at the old tax basis without triggering a significant tax hike upon the parent's death. Under Proposition 19, only a parent's primary residence is qualified to keep the tax basis, and only if the child keeps the property as their primary residence. This means that the family lake house or rental property will trigger a new tax basis upon the death of the parents. This exemption for older homeowners will lower property tax revenue, but that will be recovered by gains from the previously mentioned inherited property tax change. The net gain could reach hundreds of millions of dollars per year for schools and local governments. Most of the new money would go to the fire protection. There are a couple of important dates for this new property tax law. February 16, 2021 ends the parent-child exclusion, and the home replacement aspect will apply to transfer starting April 1st. If you would like to know more about how this may affect your personal situation or want some clarity, reach out to me to learn more. As always, be sure to speak to your accountant or attorneys as well. Thank you for watching again. I'm Farnaz, here to educate and navigate, not speculate and fabricate.